Hey guys, welcome back to another episode here on the membership program. I do want to say it's been a crazy earnings week for semiconductor companies. We've taken a closer look at a few already. To next this week, we do have AMD reporting earnings, so we will be taking a closer look at a deep dive on those earnings report. Today, we're going to take a closer look at Intel. Intel had some great numbers, right? We can see the stock price was up over 9%, sitting at $35.54. We're still not close to the 52-week high. The 52-week high happened a little bit earlier this year in September when the stock hit over $40, right? So definitely some interesting times for Intel. But I do want to say these earnings are a true testament that the turnaround story for Intel is here, that it's already underway, right? And this is what happens with overall stock prices. There were a lot of risk associated with Intel earlier on, but now those risks are being eliminated as we continue to go through every earnings, and things are looking a little bit better. So today, like I mentioned, we're going to take a closer look at everything from their earnings report. I have a lot of information here, so I hope you guys enjoy it. First, let's just kind of start over with the top level earnings review. The company did beat on earnings per share. Earnings per share on an adjusted basis were roughly 41 cents, which was roughly 19 cents better than expected. Analysts were expecting somewhere around 22 cents, right? So a lot better there. Revenue still were down on a year over year basis. They were down 7.2%, but this was also way better than what analysts are expecting. Overall revenue was 14.2 billion. Analysts were expecting somewhere around 13.6 billion. So they did massive beat in revenue and a massive beat in earnings per share. Another place that they did see kind of a nice beat was on non-GAAP gross margins. Analysts were expecting somewhere around 43%. Intel provided roughly 45.8, almost at 46%. So overall, things are looking good. Another kind of great results. We're gonna take a closer look at the outlook in a bit, but outlook for quarter four, Intel sees earnings per share of roughly 44 cents versus 33 cents of what analysts expected, and quarter four revenue of roughly 14.6 to 15.6 billion versus the 14.4 that analysts were expecting. So obviously, when you kind of get a beat all around in current earnings, but more importantly, a beat in guidance, we're gonna see that obviously causes the stock price to jump up almost nearly 10%. So we're going to explain why this company did see better results and why the upcoming quarters are also going to be are also stronger than expected. More importantly, this obviously bodes well for companies like AMD, like maybe even Nvidia, as we're going to see the consumer client is definitely a little bit stronger than previously anticipated. So if we take a closer look at their executive summary, they do mention that, hey, look, we did beat on revenue, gross margins, and earnings per share this quarter three for the following reasons. They're seeing strong sequential revenue growth in client, edge, and foundry. And they're also maybe not seeing strong, but they are still seeing revenue up on their service business. And all of this is helping them kind of get better operatings. And obviously, they are also doing expense disciplines that is improving profitability. So that's driving good things. If we take a closer look, quarter three, we can see 14.2 billion, down 8% on the year-over-year basis, but up nearly almost $1 billion above their outlook that they gave last quarter. Very similar to everything else. Everything was above the outlook that they gave the previous quarter, and we saw these are better than what analysts were expecting as well. So now I just want to take a closer look at gross margins and some other financials so we can see. So gross margins was 45.8, like we mentioned. It was 280 basis points better than they previously guided. And the main reason is they're driven by higher revenue in average selling prices and better sell-through of previously reserved inventory. So what ends up happening here is usually when you kind of have an over inventory correction, especially in the consumer, even in the client, even in the data center market, because inventory is so high, there's so much supply and not enough demand. A way to kind of get things to get moving in forms of inventories, you start reducing your prices. Obviously, if you start reducing your prices, you start to see lower gross margins. Now, when you start to see maybe inventory corrections start to improve, you're able to improve your prices a little bit better, and you're able to, one, make more sales because there's more demand, but two, those sales come out with better margins, which help overall boost those gross margins, and that's what's happening here. The company also mentioned that quarter three operating cash flow was 5.8 billion, up 3 billion sequentially. One of the main reasons was driven by the overall reserved inventory that they had, and they were able to kind of sell that off as well. And obviously, how well the market is going right now. So operating cash of 5.8 billion, up 3 billion sequentially. If we take a closer look, I do have a chart here where we kind of see that last quarter it was roughly 2.8 billion. Now it's kind of closer to the 6 billion. We can see this company has peaked in the past 5 years. Peak cash flow from operations is over 8 billion, maybe closer to the 10 billion mark. So it is improving, but we're still kind of far off from the highs. If we also take a closer look, the company does mention that, hey, look, we're executing pretty good on the 5 notes in 4 years. And what's more important about that is, obviously, 5 notes in 4 years is a lot of investment in forms of technology, in forms of engineering team, in forms of inventory and all that. And that's creating, at the moment, a major headwind on margins. But once they finish kind of these 4 notes and 5 notes in 4 years and kind of stay in a more natural growth in technology like every other industry, it's gonna be a major tailwind as they become a process leader in their own minds, which obviously helps them in better average selling prices. But they're also going to be investing a lot less in things like research and development, which is overall going to help their profit margins. And they do believe in the future they can hit gross margins of roughly 60%. Like we saw, this most recent quarter was nearly 46%. Now, what I want to take a closer look at is data center and their AI group. We can see revenue was down 10% year over year to 3.8 billion, but they are profitable in this segment now. They do mention that it exceeded their forecast this quarter, with server revenue up modestly sequentially. One of the strong reasons is they continue to see strong ramp of their 4th generation Xeon processor. They shipped their 1 million last quarter, during the quarter, and they are on track to surpass 2 million units next month. So overall, things are moving pretty well for their 4th generation Xeon, and we can see that's helping overall with profitabilities. And their 4th generation Xeon tends to have better average selling price than their previous generations, so that's also helping kind of boost operating margins at the moment. The company does mention that, hey, in the upcoming generations, Sierra Forest and Granite Rapids, those are going to be the ones that are going to help them win back share into data center space. So good things there. They do mention that there's still a total addressable market softness in the server market, but it was up sequentially due to kind of those cloud customers showing a better than seasonal recovery in the quarter. Another thing that they mention is, like I mentioned, they're seeing better average selling prices in their 4th generation processors because it has better cores, better performance than their previous generations, so they have better prices there. So overall, data center and AI is going good. We're going to take a closer look at some other things in a bit there, but now I want to take a closer look at their client computing group. So client computing group revenue was down 3% on a year-over-year basis, but even though revenue was down 3%, margins were up roughly almost 8 percentage points. And that's pretty impressive, right? It kind of showcases how I mentioned earlier, when you have a lot of inventory, you're trying to sell everything, but maybe you're going to sell it at a lower average selling price, which really impacts operating margins. Now we're in the other end where you have a little bit more supply coming in, a little bit more demand coming in, that you're able to increase your average selling prices or provide better products, and you're able to kind of see operating margins increase. So they meant that their client group delivered another strong quarter, exceeding expectations for a 3rd consecutive quarter, driven by strength in commercial and consumer gaming SKUs. They do mention that customers did complete their inventory burn in the first half of this year, driving solid sequential growth, which they expect to continue into quarter 4. So obviously bodes well for their client market, which is their biggest market right now. They do mention that there's obviously a lot of growth opportunities here for the total addressable market in the laptop space and the desktop space. The first thing is the end of service of Windows 10. And the second thing is, obviously, we are moving into this AI PC era as well, and those two things, in their opinion, are going to drive more growth into the laptop and into the PC market. They are coming up with a new generation Intel 4. Intel 4 is going to be, I forget the name of this chip. It's going to be it's Meteor Lake, I believe. It might be Meteor Lake if I remember correctly. But that is going to come out on December 14th. And this kind of new chip represents the first chiplet design enabled by their advanced 3D packaging technology. So for those that are not familiar with Meteor Lake, I think I've done a few videos of it before where it's going to include TSM chips, it's going to include Intel chips, and put all together. They're going to have its own NPU, which is going to help with AI workloads as well. So they do believe this is going to bode well for the consumer client market. They do mention that next year they will deliver Arrow Lake as well as Lunar Lake, which offer their next generation NPU, which break through performance per watts. Next, they have Panther Lake, which is going to be their 2025 off client offering, and that's entering their fab plant in Q1 of 2024. And more importantly, is going to be based on Intel's 18A, which is they believe is going to be where they're going to join technological leadership in manufacturing. So obviously that bodes pretty well. There is a lot of growth opportunity here for the client market. I personally am excited. I do believe that right now we are going to see this huge shift of PC laptop grow again in the upcoming quarters and maybe in the upcoming years, which does bode well for a lot of companies like Intel and AMD. Next, what do we have? We do take a closer look at the other segments. The other segments, in my opinion, I don't really focus on too much, but obviously we should kind of be familiar. Their next, which is their network and edge group, was down 32% year over year. This is their networking solution, and it was pretty much flat, break even on operating margins. They do mention that Next is also seeing early signs of benefits from growing AI use cases. They have an IPU, which is pretty much a DPU, their own DPU version, and they believe that's going to see growth expected to accelerate for both in 2024. So overall, we are seeing great news in their networking solutions. They do mention right now that Next entered in the inventory correction after client and the data center group, but they do mention that Q3 results beat their internal forecast and grew sequentially, and they continue to see signs of stabilizations heading into Q4. So the next we can see is down, but they do believe the bottom to some extent is over here, and now this should bode well for the overall company, and it's obviously going to help with their operating margins as well. Now, what I want to take a closer look at, they did mention a little bit more things that they did during this quarter. They did, for example, sell a part of their IMS, which is their nanofabrication business, in Q3 to TSMC. They also announced their plan to operate their PSNG as a standalone business beginning January 1st. For those that are not familiar, that's their Programmable Solutions Group, and that includes their FPGA systems, very similar to Xilinx. And they plan to report the results as a standalone segment in Q1 to overall bring private investors in 2024 and finally kind of create a path for IPO over the next 2-3 years, something like Mobileye right now. So this is a way for them to try to unlock value for shareholders. If we take a closer look at the FPGA business, is entering a period of inventory burn, and they expect their PSG business to decline in Q4 and be depressed for the next few quarters as customers work through inventory before returning to a more normalized run rate. This is very important if you are an AMD shareholder, because AMD shareholders have the Xilinx operation, and obviously Xilinx is in the FPGA business, so we might see very similar kind of tone from AMD and Lisa Su in their Xilinx business. Now I want to take a closer look at the outlook for market and market overview for Q4 of 2023. They did give us kind of a revenue, which was, like I mentioned, 14.6 to 15.6 billion. This is up 8% on a year-over-year basis. I do believe this is going to be the first time in a while that Intel is finally growing in revenue, and I do believe that bodes well. We can see gross margins is expected to be 46.5%. I do believe they might be kind of butchering this a little bit. If we are seeing improvements in inventory, earnings per share, in my opinion, if they did 41 cents this quarter, 44 cents next quarter, I think that's a little bit undershooting. If we are in this project up, you tend to see earnings per share grow at a stronger rate. So I do believe if the market is as strong as they're saying right now, then the gross margins and earnings per share are definitely going to be better than expected. But we can see gross margins of 46.5%. Overall, they do mention that they are encouraged to by the return of historical purchasing cycles on their channel checks. So very similar. This is overall helping with average selling prices as kind of healthy inventory levels and growing demand. They expect moderate sequential growth in their data center business, offsetting a decline in their PSG business and continued recovery in the edge. Obviously, the overall consumer market and the client market is definitely going to see some strong growth there as well. So now I want to take a closer look at their 5 nodes and 4 years. I do believe, I mean, I wish Intel would have given us this slide a little bit better so we understood where and what they were trying to do. So Intel 7 Sapphire Rapids is the one, their 4th generation Xeon processor that is out right now already. One more product is coming out for Intel 7, and that is Emerald Rapids. That is going to be their 5th generation processor, and that is expected to come out on December 14th. Now we have Intel 4. Intel 4 seems to be pretty much a client market only. It's not going to be for data center. So client Intel 4 is going to be kind of very similar to TSMC's 5 nanometer to some extent, and they are going to see the Meteor Lake, and which is going to be more of a laptop processor. Now kind of following into Intel 3, Intel 3 is going to be more of a data center space with Sierra Forest and Granite Rapids. Then we have Intel 20A, which is going to be mainly for the consumer market with Arrow Lake. And then we have Intel 18A, which is going to be a mixture of data center and client with Clearwater Forest and Panther Lake. So they are on track or ahead. So Intel 7 is complete. Intel 4, we're going to see. So Intel 7, they did give us some updates. Intel 7 is done and finished, right? Emerald Rapids has achieved product release and began shipping this month. In quarter 3, they begin shipping initial shipments of Meteor Lake on Intel 4, which is now aggressively ramping. So we can see Intel 7 done, Intel 4 is already shipping early on here in quarter 3, shipping to customers, and now it's ramping up in production aggressively. Now they do mention that, hey, Emerald Rapids is in production, like I mentioned, and it's ramping to customers and will officially launch on December 14th. That's the one I was just talking about here, Emerald Rapids. All right, so if we take a closer look at Sierra Forest and Granite Rapids, and we can see Sierra Forest and Granite Rapids are going to be Intel 3, they do mention that their production stepping, and their stepping is pretty much like their final, is like their blueprint. And production stepping means it's their blueprint for the production final product. So they're ready to send that for the Sierra Forest is already out. And what they expect to be the production stepping, sometimes they might find a little bit of mistakes before the production state. So what they expected to be the production stepping of Granite Rapid has already tapped in and is in the fab plants out now. So it does bode well for Intel 3 as well. So we can see that it is nearly in the production state right now. They do believe that Sierra Forest is on track for the first half of 2024, and with customers well into their validation process. They also mentioned that Granite Rapids is expected to be delivered an additional 2 to 3 times AI performance on top of their industry-leading 4th generation Xeon. So Granite Rapids is this one right here. They do believe this is going to be a strong AI workload, and they expect that, I do believe, in the second half of 2024, right? So Granite Rapids, which shortly follows Sierra Forest, is also well into their validation cycle with customers. So overall, we do see great moves here right now for the execution team of Intel of their 5 nodes in 4 years. Now we want to take a closer look at their fab plans and updates. They do mention that, hey, look, high volume EUV manufacturing is well underway in Oregon and more recently in Ireland. Their Ireland Fab 34 is where they're building Intel 4, the first high volume EUV production in Europe. So that bodes really well for Europe. And they do mention that their Intel 3 process is on track to be manufacturing ready by year end, supporting their first 2 Intel 3 products, which is the ones we just took a closer look at, Sierra Forest and Granite Rapids. They also announced their plans to begin installation of the world's first high numerical aperture EUV tools. If you guys have watched my previous episodes with ASML, you guys know that Intel is going to be one of the first players to get these crazy tools, and that's going to help with the 2 nanometer or the 20A and the 18A nodes, and that's beginning to come here to the United States in the Gordon Moore Park in Oregon. So that's pretty good news there. They also mentioned that they expect to achieve manufacturing readiness of Intel 20A in the first half of 2024. Kind of talking about customers, they did mention that earlier this year, they talk, or earlier this quarter, they mentioned that a major customer committed Intel 18A and Intel 3, which includes a meaningful prepayment that expedites and expands their capacity corridor for this customer. So they do have a really, really big player that did a meaningful prepayment. They were also happy to announce that they has signed two additional 18A customers. So that's pretty well, and they are both focused in areas of high performance compute and benefiting from power performance per unit silicon area. They also have made substantial progress with their next major customers and are expecting to conclude commercial contract negotiations by year end. So earlier, about a few months, they mentioned their big customer that they had a big prepayment for. Now they mentioned two new customers already signed, and they're also believing that by the end of this year, they're going to have a fourth customer. I do believe by this time, Pat was only expecting one customer by the end of the year, and instead they have four. So they are moving pretty strong here in the consumer space. I wonder, I'm kind of curious to see who these customers are that are focused in high performance compute. If I was to guess, and this is just my overall guess, if you guys are watching this in a year from now, let me know if I was right. But I'm gonna guess that the ones that are working on the high performance compute, one of the customers is going to be Amazon. Amazon has actually partnered up with Intel really well. They actually even designed their own custom Xeon 4th generation processor. So I do believe that bodes well for Intel as maybe a future manufacturing player, especially as Amazon creates numerous chips in the high performance compute player. So I do believe one of those customers could be Amazon, and I want to say I'm gonna guess that my probability of being right for it being Amazon is pretty high. The second one, I don't think it's necessarily that high, but it's one that I could also see in the future, and that could be Google. Google and Amazon and Intel have been working on an IPU. Let me just see, Intel, Google, IPU. I believe it's Intel and Google. Intel, yeah, so the IPU, so co-designed with Google, a top cloud provider, IPU, they have created, right? So this is kind of like a DPU type system. So if I was to guess, and this is me putting high expectations, so no, maybe these could be very small players, I would say one of those customers has to be Amazon. The other customer is most likely Google. But I could be completely wrong. It could be some random small companies that we've never heard of. Other things, they did mention that, hey, look, we are seeing a huge growth in advanced packaging from most leading AI chip companies. I only really know one major leading AI chip company. I wonder if it's NVIDIA. Now that I'm just name calling, they don't really tell us who. But during the quarter, they awarded two customer AI designs for their advanced packaging, and with additional 6 customers in active negotiations, they expect several more awards by year's end. So pretty interesting here that they are seeing kind of that interest in advanced packaging, and that's overall helping with their with the revenue and the growth that they're seeing. We're going to see that in a bit, but they do mention that we're going to start to see those packaging customers start to materialize for us in revenue next year. Some final things, they do mention that, hey, look, they have submitted their proposals in Arizona, New Mexico, Ohio, and Oregon to the CHIPS program to get money back and incentives back. They are also planning a manufacturing event in Q1 of 2024. And outside of that, they did make a nice business relationship with Tower Semiconductor, a company that were going to acquire it, but unfortunately China rejected the deal. So instead, they're giving them the big FU, and they're saying, hey, look, we're going to find a way to work together. Tower is investing capital expenditure of roughly $300 million in certain facilities for Intel. And Intel has facilities that can work for more advanced nodes, right? But we can see they're trying to focus on more mature nodes. So with this partnership, it's like, hey, look, we're going to kind of lease you out some of our technology right now. We're going to give you this partnership. You're going to help us with some capital expenditure, but you don't have to invest fully in advanced manufacturing nodes. And you can kind of use our manufacturing process to develop whatever you want to. Another great thing is we we are here in the United States, so you can kind of benefit from this if there are certain customers that only want United States chips made. So obviously that bodes well for for Tower and obviously for Intel. Here we can see Intel's foundry service up a nice amount, almost 300% year over year. They do mention most of the revenue came from higher packaging sales. Obviously, right now we are still not seeing that in operating incomes, and we should expect to see that over the upcoming quarters. They do mention that IFS operating loss was 86 million. One of the main reasons was the huge ramping in factory, right? We're seeing all this manufacturing ramping up all over for them for Intel 4, like we saw for upcoming Intel 3 for their upcoming data center solutions. So that's obviously creating a huge operating expense for the company. Now I want to take a closer look at AI. So AI is obviously pretty interesting. Not the forefront for Intel, but it does kind of give us some indication of where the market is. They do mention that they see AI workloads a key driver of the $1 trillion semiconductor total addressable market by 2030. For those that are not familiar, by 2030, we do expect the semiconductor market to be roughly $1 trillion business. They do mention that AI is helping gonna push that into that direction. They do mention that the market right now is shifting towards local inferencing. So a lot of the AI workloads right now are done on the cloud, but it does seem like we're pushing, and we've heard this from Qualcomm, right? If you have been watching my episodes, we've done a deep dive on Qualcomm here on the membership program of why they enjoy local inferencing, and they do believe that's where the market is going. That's where Intel does believe as well. They do believe that it's necessary both for data privacy and obviously cloud-based cost. And they do mention that their next generation of chips like the Core Ultra that are going to have their NPU are going to help with the nice local inferencing. But obviously there's still going to be some form of edge and cloud computing needed as well. So the company also has software solutions and their Xeon accelerators that help with that as well. They do mention that, hey, look, the industry has kind of been shifting from CPU spend to accelerator spend, being i.e. GPU, over the last several quarters, as well as some inventory burn in the server market. But they see signs of normalization as they enter quarter four, driving modest sequential total addressable market growth, and they see growth in compute cores returning to a more historical rates of a depressed 2023. So they're saying it seems like the shift, I don't know if the shift is really turning, but at least they're seeing signs of normalization in the CPU front. I'm going to have to listen to NVIDIA in a bit and kind of really think about this to see, does this mean bad news for AI accelerators? It's too early to tell, but something I am going to be keeping an eye out for. They do expect, obviously because of the AI market, to see a growing portion of accelerated market, which is their GPU, mainly their Gaudi, to grow in market share. They are pleased with customers' momentum, and they are seeing for their accelerator portfolio, and Gaudi in particular has nearly doubled their pipeline over the last 90 days. Last 90 days, they mentioned that it was roughly a $1 billion pipeline, so if they double it, it's nearly $2 billion at the moment. They do mention that, hey, look, they're focused now on having enough supply to meet their growing demand. They partner up with Dell. Dell's kind of creating these pretty cool power edge systems that are going to include their Xeon processors and their Gaudi AI accelerators. They're also building one of the world's largest AI supercomputer for Stability AI, I believe, and they remain on track with Gaudi 3 out of the fab, now in packaging and expected to launch next year. And in 2025, they'll have Falcon Shores, which is going to be a GPU and Gaudi's capabilities into a single product. So we're pretty excited about Falcon Shores in 2025. There was a Q&A session that kind of asked, hey, look, Gaudi, that's pretty much Gaudi, your pipeline doubled in the last 90 days. How much of that is training versus inference? And it's pretty much a person trying to understand where is the market really heading. So there is a lot of search in this category. Pat Gilslinger mentioned, and they're coming in from a small base, right? So it's a very, very small market. So it's very important to understand that, because what they see might not be a true representation of the whole space. But what they're seeing is that the inferencing side is where they expect most of the expansion to go. The market will be in the inferencing deployments, and that will be something that both their Gaudi and their Xeon processors play into that market. So that bodes well for them. I do have a few more slides. Next, we're going to take a closer look at ARM competition. We've heard a lot of ARM rumors and reports in the past week. So there was a question, hey, how do you see these competition? So Pat Gilsarger mentioned that, hey, look, we take all competition seriously, but at the moment, we don't see any of these as potentially being all that significant overall, especially as they continue to evolve next generation chips. They're going to continue to be super, super strong. What they actually see this is, they don't see this as a weakness. They actually see this as an alternative architecture, which compared to x86, which could bode well for their foundry business, especially since their foundry business has pretty strong partnerships in the ARM, has made a partnership with ARM. So they see it more of an opportunity for them being more there's more competition in the PC space one way or another. We heard from Qualcomm that they just recently released their SnapX platform, SnapX Elite, and we also heard reports that NVIDIA is also going to enter this market. Now, the final thing before we take a closer look at valuations is their international and export things. For those that are not familiar, Intel does have a factory in Israel. And first, they obviously want to say, look, they're worried about safety, and safety is a priority. But right now, their team there is able to operate and running the factory expansion is progressing. So things are not that bad for Intel. For those that are not familiar, they have Intel 7 factory in Israel, right? That's what they're doing. But they have other 2 locations that also run Intel 7. So unfortunately, right, I don't want to play this in an evil way, but in a business aspect, they're saying, hey, look, if anything happens here, we still have other opportunities in other markets where we're able to continue Intel 7. More importantly, right now, everything is progressing as impacted. There was a final question that kind of talks about the Gaudi business and how the Chinese exports might be impacting that. The overall company says that they see worldwide demand for their activities, and right now, they are now supply constrained on Gaudi, very similar to NVIDIA. So they don't believe that they have plenty, they're not going to see much kind of pain from these restrictions in the short term, but they do believe that they'll have plenty of opportunity in China coming soon, even if they follow regulation laws, right? So they do believe this is still a big market for them. So now I want to take a closer look at valuations. Here I'm taking a closer look at Intel, Taiwan, AMD, and I want to say Intel, in my opinion, is the perfect mix of those 2 players, TSM and AMD, and I'm looking at forward 1 year, 1 year forward 1 year PE ratio, right? So that's not the end of this fiscal year. That's the end of next fiscal year. So it's about a year and a quarter. So in my opinion, Intel needs to be placed in the middle, and that's exactly where it is. AMD's forward 1 year PE ratio is 23.26. TSMC's forward PE ratio is 14.22. Intel right now is 18.96. I do believe for where the market believes, for where Intel's at right now and where analysts are expecting their earnings per share to be, Intel is properly valued. Maybe if they do be expectations, and I do believe they are going to continue at least for next quarter, it might be a little bit undervalued. For me, I believe I would personally like to enter into Intel when its valuation gets very close to TSMC. I do believe if its valuation gets closer to TSMC, if it gets to that 16, maybe even that 15 PE ratio, I don't know if that will ever happen. That's when, in my opinion, is a huge opportunity for Intel. If it starts to trek up closer to AMD, I do believe that's when it starts to get a little bit overvalued. But right now, I want to place it where it's not that bad, not that scary, a nice amount of risk to reward ratio. So I hope you guys enjoyed today's episode. This was, in my opinion, one of my favorite deep dives in a while, because I really, even though I don't have Intel, I really do like following this market, and we did learn a lot in today's episode. So take care, have a good day, and see you next time.